Come on in, sit back and relax. You're listening to the Wealth Tech Today podcast. I'm your host, Craig Iskowitz, founder of Ezra Group Consulting. This podcast features news, information, and updates on the trends and best practices all around wealth management technology. And our guest for this episode was my very good friend, Cheryl Nash, President of APL at InvestCloud. Now, Cheryl is one of my oldest friends in the industry. We met on my very first project, building a portfolio rebalancing engine for a new TAMP way back in 2005. Of course, they were using APL for portfolio accounting. And Cheryl has shown some incredible resiliency and has weathered multiple acquisitions, spin-offs, and mergers in her 30-plus years in the industry. Cheryl originally worked for Chicago-based startup called Security APL that was acquired by CheckFree Corporation back in 1996 for a whopping $50 million. At the time, CheckFree, I think their revenue was also $50 million. Now, jump forward to 2007, and CheckFree had grown into an e-commerce business giant, processing more than 1 billion transactions annually for 21 of the top 25 financial institutions. And this attracted the attention of Fiserv, who acquired them for $4.4 billion because their payment and internet banking capabilities were very attractive to Fiserv's then president and CEO, Jeff Yabuki. In 2019, Fiserv made a deal for New York-based private equity firm Motive Partners to acquire 60% of Fiserv's investment services business. Now, it's basically the Security APL business unit that was being run as a separate entity for the previous dozen years for around $600 million. Now, in 2020, Motive rebranded that new business as Tegra 118, which I thought was a ridiculous name and made absolutely no sense, at least not in our industry. Well, that name only lasted a year, and that whole, as a separate business unit, only lasted a year, because Motive then merged them into a deal where they recapitalized InvestCloud, along with Clear Lake Partners, City Ventures, and a couple other firms, into a deal that was valued in itself at $1 billion. Now, jump forward to January 2024, and things come full circle, sort of when InvestCloud announced the hiring of Jeff Yabuki as their new CEO. And that brings us to this episode with Cheryl. So what do we speak about? We talked about the evolving and ever-changing financial supermarket that was what APL was called, but now it's back to the APL name, which I think is a much better name. We talked about the Altic network, which was called the PMA network, but now Altic for Alternative Investment or InvestCloud network, where they're integrating private markets into UMAs. We spoke about their partnership with JP Morgan subsidiary 55IP for tax optimization of public and private assets. Talked about APL modernization and their new moat that they're building, and the next frontier for UMA and artificial intelligence. Now, and speaking of AI, it seems everyone these days wants to talk to us at least, about oversight and management of AI. But this is really only possible if your underlying tech and data strategy is designed with AI in mind. So if you're running a wealth management firm and have questions about how you can best support and control your AI infrastructure, I want to tell you about a terrific offering from Ezra Group. We call it our fractional CTO service, or Fracto. Our Fracto service can support your current CTO on specific projects or help you build your tech and data strategy from the ground up. We can help your ops team from drowning in manual workarounds, or if you just made an acquisition, but now you've got 2 CRMs, 3 custodians, and nobody knows which is the system is the source of truth. Our Fracto service puts Ezra Group's senior consultants in your corner on a monthly retainer. We can fix your integrations, clean up your data, and execute on those projects that have been sitting on the back burner for years. So if you want to free up your firm for exponential growth, you need to run, not walk, to our website, EzraGroup.com, and click the golden Contact Us button on the homepage to schedule a free consultation. We know what works and what doesn't. All right, now standard housekeeping chores. Please subscribe, yada, yada, yada. Check out our sponsor, the Invest in Others Charitable Foundation at investinothers.org. And if you're a software vendor in the wealth management space, you want to have the right data in our Wealth Tech Integration Score database, so your Wealth Tech Integration Score is always up to date. You can do that if you register at EzraGroup.com/register, and then you'll be able to update the data in our database for your product. All right, now let's kick this thing off. All right. I'm excited to introduce our next guest is my very good friend Cheryl Nash, President of APL at InvestCloud. Cheryl, wonderful to see you and talk to you today.
Same, Craig. It's always great to see you and talk to you as well.
It's been too long. How are the grandkids?
Grandkids are great. So, three grandkids, believe it or not, 3 years old, 18 months, and 14 months. So, life is
Nice.
busy. They were just over this weekend. It was so much fun.
That's the best. That's what it's
Yes,
all about, right? That's why we're doing all this, why we're traveling so much. You travel more than
that's
me.
right.
We're just comparing flight information and how many miles you've flown already. And I'm catching up to you.
You're catching up. I'm not sure if that's a good thing or a bad thing, but you're catching up.
I mean, it just has to be done. But yeah, there you go. All
Yes.
right, so let's get going. Give us, if you will, the 30-second elevator pitch for InvestCloud.
Very good. So, InvestCloud is a global leader in wealth technology, built to enable a smarter financial future and redefine what's possible when wealth technology is connected, intelligent, and human centered. APL is InvestCloud's managed accounts engine, the operational backbone for portfolio management, trading, rebalancing, performance reporting, and portfolio accounting at enterprise scale. That same infrastructure now powers our private markets account, enabling public and private assets to be managed together within a single managed account. Today, APL supports close to 4 trillion in assets, over 10 million accounts, with built-in automation and connectivity to over 90 custodians. So our goal and our focus is to really help the wealth and asset managers simplify day-to-day operations and deliver personalized portfolios more effectively and efficiently.
That was more than 30 seconds, but I'll let you go because it was very good. It was very well written. Yeah, it's complicated. I mean, you've
Yeah,
been working at APL your entire career, and you've seen it go from you make basically a niche product to now running $4 trillion in assets and
yeah,
being a core to the
it's quite
industry,
amazing. Yeah,
right? And I was
yes,
just looking back. You were on episode 5,
I was
right?
okay.
So we
Wow,
were talking about we are trying to get this podcast is due to Cheryl Nash. That it was her idea that I do a podcast in 2018. And I tried to get her on this episode 1, but she was busy. So she was episode 5. And we just agreed that you're going to be on episode 400, which is going to be in 70 weeks. So we've all got that blocked out.
excellent.
All right. So first question after that, how is your strategic vision for the financial supermarket, which that branding has changed, the financial supermarket, how has it evolved now that InvestCloud is prioritizing the integration of public and private markets within the managed account ecosystem?
So I love that question, Craig. So the financial supermarket used to mean product access, where shelves were filled with mutual funds, SMAs, structured notes, and then bringing that all together. But that access created fragmentation. Advisors were forced to stitch together products across separate systems. So now when we think about taking that access into more of a integrated orchestration inside a unified managed account, it's really more than just the supermarket, right? It's more around how we look at a unified managed account. I think, Craig, you and I probably talked about unified managed accounts in episode number 5, right?
We
That's how long
probably
this has been around. I think we
we've been talking
probably
about
did.
it a long time before the podcast, certainly.
That's right. It's no longer just sleeve accounting. I think it's come a long way since episode number 5. It's really the central operating framework for portfolio construction, public equities, fixed income, ETFs, private equity, private credit, and everything that you could think about that you can actually use from a investment perspective inside one rebalanceable, which is really important, rebalanceable, tax aware, digitally connected account. And that's when I think about the difference between the supermarket, just having access on a shelf, to then taking that access and making it more holistic and connected. So you have one separate place where you can go to look at across all of your investments.
I think this is a huge deal, and I had this conversation with a CEO of InvestCloud, Jeff Yabuki, who was
Mm-hmm.
on I feel like it was his episode, but was I think it was last year or 2 years ago. And what I made the observation was your new private markets account and that whole PMA network you're building reminds me of the Galaxy network, which was the
Oh, that's
first
right.
network connecting sponsors and asset managers that really put APL on the map. So how do you see that Do you agree that that's a valid comparison analogy? And do you see that as an opportunity for InvestCloud to become the premier connector of providers of alternative investments and wealth management firms?
I love that you remember Galaxy. So Galaxy was our network, right? Connecting asset managers and wealth managers. So the asset managers manufactured their products to be distributed out to the wealth managers. And that had really, I say we connected this whole managed account industry when we developed that, right? So we created all the infrastructure, all the data points, all the connectivity, and we still run a tremendous amount of data through our platform that still connects that asset manager to wealth manager. So you made that, you made a great point there, because when I think about what we're doing now for private markets, it's the same type of thinking, right? We're taking all those lessons that we learned over the last 30 years of connecting the asset managers and wealth managers, but thinking about it more holistically around how do you take the GPs, how do you take all the different market providers for privates, all the different firms that are out there like the iCapitals of the world, and how do you put that all together so that it's an easy place for you to transact and manage accounts, a private asset in a unified managed account. There's so much complexity around that, and it
Mhm.
works today in brokerage because that's one-off trading, right? But if you think about moving that from brokerage, which is one-offs, to rebalancing hundreds of accounts at the same time, you have to take away that data point that causes a lot of friction. So that's what we're building. We today run over 1.6 million trades on APL a day. So we're taking you, just even if you take, 10% of that or 20% of that and make that more from an alternative perspective, we need to make sure that we're creating the infrastructure that can support that amount of activity and growth. And it's really around how do
Yeah.
you make sure there's trades go through in good order and you're not creating all these one-off fixes that have to happen like they do in brokerage.
And that's the beauty of this. If this works, right, which it should work,
Yeah.
you guys got a good,
It,
good track record of making things work. But is that the issue we've had with alternatives? Is there's so many different marketplaces, whether it's
yeah.
iCapital or Case or Arch or Opto, or there's so many of them. Every custodian's got their own alternative investment platform. So if you're an advisor, you could be bouncing around between many different platforms to manage your alternative investments. When if you could just slot them in as a managed account, you're done.
Yeah, that's
Right?
exactly right. And so I think more of it, you're right about the marketplace. Everybody's announcing something. There's probably a daily announcement on private credit, private markets, infrastructure, things like that. A lot of acquisitions happening, right? This is a really hot time in a hot market for firms to figure out exactly what they need to do to enable retail investors to own a private credit or an ETF in their portfolio. So we think about it bigger than a marketplace. It's really managed infrastructure. And through our network that you talk to, right, where we have our Altic network, which is really an alternative InvestCloud network that is bringing in all the different players or all the different players into our ecosystem. So private investments can be implemented, monitored, and rebalanced within managed accounts, not just purchased. Today, it's
Wait,
mostly purchased.
what did you call that? The Altic
Altic,
network? Is that
Altic.
ALTIC, like the IC for InvestCloud?
IC for InvestCloud and ALT for alts.
Altic. Cute. Okay, so the
Altic.
Altic network is not the PMA network, the Altic
It is the
network.
PMA network with a new
Right.
name.
The new name. Okay, okay, good, good. I'm glad
Yeah,
we worked that out. Good. The Altic
that's right.
network. So how
Yes.
does the Altic network solve the swivel chair problem, right? We've got advisors. When you're looking at one of the biggest problems with alternative investments is all the logistics that go along with them: capital calls, tax optimization, all these diverse asset classes,
Yeah.
private equity, private credit. How does the Altic network solve for this?
So it's meant to be a single sign-on place where advisors and home office operations people can go to transact private markets and manage accounts. So right now we watch this, right? We're sitting with our clients and watching them in the brokerage world where it's much easier because it's really one trade at a time, but they still have to go get data from their custodian, they have to go get data from their alts processor, they have to go get data from wherever they have that data stored within their ecosystem, and they pull it all together. A lot of it's through spreadsheets, curated spreadsheets that feed different systems. So our goal is to have a one place single sign-on where you go in and we're connecting you to all the places you need to go. So we're connecting you to the different alts processors. We're also digitizing a lot of that on our own. So you may not need some of the different capabilities that you have today. You may be able to leverage some of our capabilities that we're building. And we'll talk about what we're doing with 55IP. It's another great example, right? Single sign-on into a tax-managed platform that enables you to rebalance tax lots, public and private, in the same place. So we're looking at how do you take liquidity calls, capital calls, liquidity windows, tax optimization, all the things that are really critical that are different than a public security, and bringing that data together in one place. So again, you go into our single sign-on, our platform, and you get access to everything that you need access to. That's a big, when you think about it, that's a big undertaking. We've been probably focused on it for the last 18 months. And it's coming together, right? We're starting to really see this come together. And it's all around data and AI, right? And bringing some of the AI, agentic AI, and all the things that are making things a little bit easier for technology firms to do some of this and connect more, I'd say, effectively and efficiently.
All right, so you jumped ahead, so let's just do that. Talk about the expanded partnership with 55IP. Now, 55IP, when they started, they were to me they seemed like a TAMP, and then they were acquired. Then they really moved into tax management and tax sleeves, tax loss harvesting, and then JP
Yeah.
Morgan acquired them. So what's
Yeah.
that partnership with InvestCloud, and what's the benefit to advisors or to your
No, that's a
clients?
great question. Yeah, 55IP is now under the JP Morgan umbrella. They're
Who
a
has also
strategic,
been a client of APL for many years.
very, very big client of APLs for many, many years, right? And they're also very, very much involved with us in private markets. But what makes the 55IP partnership so powerful is that it moves tax optimization from being a public market overlay to being embedded directly into the architecture of UMA that includes both public and private assets. So I believe this will be the first entree of a tax optimization platform that is UMA enabled through
Mhm.
APL's UMA sleeves, and then can rebalance at the tax from a tax
Mhm.
perspective, public and privates in the same account.
Right.
And we partnered with 55IP even before they were acquired by JP Morgan. Our clients, as you know, Craig, everybody's talking
Mhm.
about personalization and tax management, and 55IP does a great job in that area. We've got some clients working with them today. But really, when you think about like tax loss harvesting, tax transitions, it really was more confined to daily price securities. Alternatives were usually outside of that tax engine. Advisors had to manage public and private separately, as we just talked about. But by integrating 55IP's active tax technology directly into our private markets account structure, we're enabling systematic tax optimization across the entire portfolio, not just the liquid sleeve. So it's a big deal. It's a big deal, and it's
Yeah.
for 55IP's RIA clients.
It's a huge deal. And I
Yeah,
think what also a lot of people don't realize is how APL has not only your wealth management business, portfolio accounting and portfolio management, but you've got a large market share with asset managers who use
right.
the APL platform. So you've got that other benefit as well.
That's correct.
Right.
Yeah, we have over 150 asset managers leveraging APL today
Right.
directly.
So working with APL, you get access to both.
Correct.
Right.
That's right.
All right. So a year ago, InvestCloud announced, sticking with the alternative investment discussion, you announced a partnership with Apollo, one of the largest alternative asset managers. So can we talk a bit about their private market portfolios, multi-manager models, and how that's getting into managed account programs and how it's going to add more, and are you going to add more alt managers to your network?
Yes. Again, a great question. So when you think about what we announced a year ago, that was the very beginning of this whole, I'd say, thinking around the network,
Mhm.
right? Apollo was our very first asset manager that we signed up for our network. But they've been a really amazing partner to us.
Mhm.
They've been a powerful catalyst for our private markets network. So their expertise in this space and their pure partnership and depth and their depth of private markets has helped us really design what we're talking about today, right? The private markets account and the private markets network. They're our founding partner. They came in early. They work side by side with us to shape the product, to really shape the broader distribution model. And, they have really combined, their breadth of private markets alongside our breadth of managed accounts. It's allowed both of us to have really meaningful conversations about what it takes to scale. So they've been an amazing partner. You asked about adding additional asset managers. Yes, we've brought other additional alternative managers into the working group. They've been, and we're not announcing them yet, but you'll see a bunch of announcements come out shortly. They've been incredibly valuable in validating the models and the underlying workflows. So when you think about what we're doing and creating this network that's going to redesign how private markets interact with managed accounts, right? There's a whole lot of work that needs to go into that about rules, workflow, right? So we brought in a group of asset managers to help us with that as well. Mm-hmm. We'll really introduce that once we go live with our first wealth manager on the platform. There's been as you saw, no shortage of headlines. Oh, yeah. So we're being intentional about only communicating when there's a major milestone. So we're being very intentional on that and not just, putting out information in press like we're seeing just because our clients are asking us to make sure that we're putting out things that are very intentional. So more to come on that. But Paul has been an amazing first founder partner with us and, designing everything we just talked about.
I'm glad to hear that. We want to see this moving forward. It's going to benefit the industry as a whole to have more access to alts in a way that's already delivered. Like we've already got these operational capabilities. Why build a separate one? Just build it right into what we've already got, right?
And we built it, right? So we know what it is. I mean, it's been
you're the OG,
so many learns.
Account OG of portfolio accounting, right?
The OG. I like that.
Right. So you've described APL infrastructure as a moat, protecting your 4 trillion in assets. So let's talk about modernization. I mean, people talk about when they try to badmouth a particular technology, they go, well, that's old. Well, Java is old. Lots of, Windows is old. Mac OS is old. Like lots of things are old. Just because it's been around a while, that means it's been successful. And any software becomes legacy after a while. And everyone has the same issues. Oracle has been around for 30 years, right? So the same length of time as APL. So let's talk about how you're modernizing the legacy core to meet the new demand for hyper-personalization.
Love that question because we do think of ourselves as sitting on this moat, which is really, how we describe APL. But when I think about our moat and I think about what a modern platform needs to do today, we are very scalable, right? Tens of millions of accounts, over, close to 4 trillion of assets. And it's all because of our deeply embedded infrastructure. So we sit at the intersection, which we talked about, asset managers, wealth managers, custodians, like we connect to every custodian, every trading venue, reporting, tax engines. That connectivity creates switching costs and network effects that are incredibly durable. So it's a really sticky platform that is, that continues to innovate over time. But when you think about our moat, it only holds if you modernize it, right? To your point, like you can have a moat, but you have to continue to keep up with where the industry is going. So we have, 3 areas of focus. Operational efficiency at scale, right? How do you modernize some of the reconciliation processes? Believe it or not, Craig, there's still, recon teams that are still daily, reconciling our platform against their back office. So how do we automate workflows end to end? And that's one of the things that agentic AI is helping us with. Data architecture modernization. So transform APL from a transactional engine into a data intelligent platform. That means normalize real-time data. So again, really focused on how do you partner with these custodians and other, data providers for real-time access. And then, enabling better reporting, better rebalancing logic, and better household level insight. And then lastly, embedded AI and personalization engines, right? So we're loving what's happening in the industry around AI. It's not just a bolt-on feature. It's becoming part of the invisible. We call it invisible infrastructure. It includes intelligent screening, automated exception management, tax-aware decision support, and it's really designed to augment advisors and home office and others in our industry, not replace them. So when we think about modernizing, those are the three focus areas that we're working on.
And that's always been not always. That's been a constant refrain from everyone whenever the words AI come up. Is how are you going to ensure human-centered design?
Yeah.
Right? How are you going to avoid replacing people? I mean, there's going to be some tasks replaced, but you're still
Yes,
going to need people. We're actually seeing in a lot of areas there that AI is driving more need for people who can operate it.
that's right. It's a pivotal time right now, right? When you think about what's happening with private markets, AI, data, like all those things that are so important. And I think I just saw something that you posted around data and AI and how important, good data is, right? Which has always been important, right? Whoever has the best data wins, right? We've always said that, but now more than ever, it's important to have clean, good data if you're going to, apply AI against it.
So, speaking of applying AI against things, in your role, Cheryl Nash, as Chief Customer Executive, what's the number one friction
President,
point?
president.
As president, what is the number one friction point that wealth management CEOs are asking you to automate out of existence this year?
So it's really the operational. That's another great question, right? So
These
when
are
I
all
think
great
about
questions. I don't want to give
here's
you the
your
great
yeah,
questions. I save them for you.
I love that, Craig. Thank you. But I think about when we're in front of our largest enterprise clients, right? We've got the best, biggest clients in the industry, and we get to have conversations with them about strategy and where they're going and what they want to do to help make their business more efficient and more effective, right? So, their number one friction point that they ask us to automate out of existence is operational drag between product strategy and advisor execution.
What does that mean?
So, what does that mean? I
That's
knew
a
you were
long.
going to ask.
That's a consultant term. That's what I would say. You've got some operational drag between your.
No, but I think it's when you think about what they're trying to do is look at like product strategy. What do I need to, like we talk about privates? How do I get that out into the market from a strategy? But how do I make sure it's not a drag on operations and that it actually enables my advisors to do their jobs? So,
Okay.
I think firms design sophisticated portfolio strategies. We talk about it, right? Model portfolios are not going away. They're continuing to grow and become even more prevalent. Alternative allocations, which we talked about, tax aware approaches, like all that personalization just makes, I would say, a friction point that needs to be eliminated when you think about what the strategy looks like versus how do you execute on that strategy. So our clients are very focused on the advisor as they should be and the investor as they should be. But when you think about advisors or even home office people who have to navigate multiple systems, there is a fragmentation there, right? That is around reconciliation
Mm-hmm.
risk, manual work, slower adoption, right? So when we are with our clients, we're really helping them think about how they bring it all together into one place and, get have their product strategy meet some of the things that they need around operational inefficiencies, around workflow. How do you take this manual exception handling and turn that into automation, right? So
Mm-hmm.
you're not having this manual exception handling in the way. And then one of the things we also hear, Craig, all the time is time to market. Like clients don't want to wait anymore, right? They can't wait 12 to 18 months to get something done, to operationalize a new product, to operationalize something that they've been working on in the background and only bring to us when it's ready to go. So, we have to make sure our infrastructure allows for innovation. So lots of words there, but it's really
Yeah.
one of our biggest, I'd say, items that we come across with our clients is here's our strategy, here's our priorities for the year. Okay, go make it happen.
Mm-hmm. All right, we have 2 minutes left. I wanted to squeeze in
Okay,
one more question. We
okay,
we talked about UMA and how 20 years ago we were talking about UMA as the next big thing, and we're still talking about it. So,
yeah,
but what do you see as the next frontier for UMA now that all the basics and all the logistics we've kind of worked them out? Basic sleeve accounting, rebalancing, it's all become a commodity. Besides alternative investments, what's the
right.
next frontier for UMA that you would see?
I think it's around householding, right? So now we've got the unified account, viewing your entire, assets in one place. Now, how do you take that to the household level? So that's, I think, the next frontier is once we get the privates going, all the, the individuals' assets in one place so you can rebalance against it. And I don't know if you saw Wells Fargo and Fundfire had a release around bringing their FAD, which is their financial advisor directed platform, into the UMA, right? All of that is every advisory program is moving into the UMA, which makes so much sense. The next thing coming after that is going to be, okay, now take it to the household. Mm-hmm. Bring that to the household level.
I love it. I love to see the more household level rebalancing, reporting, billing, getting everything at that level would be a tremendous benefit.
Agree. Yeah.
Well, Cheryl, you've said it all, and we are out of time. Where can people listening find out more about InvestCloud and APL?
Yeah, so our website is investcloud.com. You can find me on LinkedIn, and please reach out if you have anything that you'd like to speak about.
Or you can find Cheryl Nash at almost every conference everywhere in the country. You never every major broker dealer, you've been visiting them. You're nonstop. Right?
I love being out in the market.
Got to keep talking to clients. Cheryl, thanks so much for being here. It's great seeing you.
Thank you.
Hey, it's Craig again. Here are my top 3 takeaways from this episode. Number 1, InvestCloud is building out its Altic network to provide a single platform for advisors to access and manage alternative investments within a unified managed account. This solves the fragmentation and operational challenges that advisors are facing today. Number 2, the partnership with 55IP will embed tax optimization capabilities directly into the private markets account structure, enabling systematic tax management across both public and private assets in the same portfolio. And 3, the next frontier for UMA, according to Cheryl, is moving beyond just account-level management to true household-level portfolio construction, rebalancing, and reporting. This will drive greater personalization and tax efficiency for end investors. All right. Congratulations. You've reached the end of another episode of the Wealth Tech Today podcast. Thanks for listening. But before you go, please drop by our website, ezragroup.com, scroll to the bottom of the homepage, and sign up for our newsletter. Once a month, you receive an email chock full of wealth management goodness, news, information, and updates. You will not be disappointed. Thanks again for listening, and talk to you all again next time.